My name is Niclas. I'm the founder and CEO of Tidely. I had actually a management career, 25 years, before I decided, I would say quite disruptively, to change my life and to come to the crazy idea of found a startup. I'm still married to my wife, which is the good news after 5 years, even with a startup. But today is not so much about me. Yeah, exactly, yeah. Today is not about me, it's about this wonderful group of panelists, super experienced, extremely good-looking guys. I would like to start with Serge, to introduce Serge to you. Serge offers is running business banking for ING here in Germany. He, I think, has grown up in ING, to be very honest. He started his career as a trainee 2006 in ING, became head of regulatory reporting in 2016, 2018, head of external reporting. Then he had the privilege to go to his wife to say, darling, we will move to Bucharest now, which I would assume was a very sparkling, reaction. Also, you are still married because you are currently looking for an apartment because he's now moving to Germany to run the business banking side here in Germany. So warm welcome to Serge here in the panel. Next to Serge is Alex Müller. Alex Müller is the country head for Holvi in the DACH region, Germany, Austria, and Switzerland. It's a quite amazing, I would say, journey that Alex has gone through. He started as an investor with Speed Invest. They invested in Holvi, which is really funny because the circle is closing again. Holvi was then acquired by BBVA. This was the exit for Speed Invest. Then Alex decided, I love the startup sector. He became actually the commercial or VP growth for Airbank, later known as Friday Finance, successful exit to client, and now you are country manager for Holvi. So welcome, Alex, to the panel.
Yes, you did.
You need to ask him in a second. Hold on, Mandya. Mandya, that's okay.
I was quite curious.
You feel the vibrance of this community. Pierre, welcome, Pierre. Pierre is managing partner Alvarez and Marsal in the space of financial service and digital. Pretty impressive background. He was the global head of technology for Barclays. He went out of Barclays to become managing partner of PwC. Then he actually founded a company called 11FS, if I'm right, technology consulting in banking. Became CEO, and then decided to join Alvarez and Marsal. Very experienced people in Alvarez and Marsal. I have own experience working together with Alvarez and Marsal. Great to have you here. You are truly an expert for digital operating models, business models, and transformational journeys. Welcome, Pierre, to the panel. Thank you. And last but not least, Mandya Aziz. Mandya Aziz is a chief commercial officer of Banxware. Typically a very vibrant model. You also started your career in consulting space in automotive, which is quite fascinating, from automotive to finance, but it's really great.
I still love it, I have to say.
The automotive or
both.
Okay, good.
Yeah.
Let's see that our automotive industry recovers again. Let's see, let's hope. You are passionate for building partnerships, especially in the role of running the commercial side of Banxware, which is I would call it more a product-led company. Embedded finance are the buzzwords we will talk about in a second. It's great to have you on board, Mandya. So warm welcome. And now we get to the content, and I would like to start with Serge. Serge, when I was a consultant back in these days, it's long ago, we always looked at a couple of banks which we found being the best practice players. And ING was one of these players, being very known for agile, super customer-centric, great customer experience. Share with us, what's the perspective of, you recently actually committed very strongly to the German market and really starting the business banking business segment here with accounts, lending, and savings. Give us a little bit maybe, or open the curtain for the group here is, what makes ING so special, and what's your commitment to business banking, and how do you define next generation SME banking at ING?
Okay, that's 3 questions at once. I will take them maybe one by one. I think if you start to look at what makes ING special, and you elaborated, I've been with the company for 20 years, different roles, different functions, different countries. I think the commonality that I feel across all of them was what we call the orange culture. And I think the orange culture has, for me, 3 main pillars. One, it is really having an entrepreneurial and digital mindset. So we really try to empower people to go out, to try things. And this also comes a bit back, if you think back in the time that we started ING Direct. I think we really tried also to disrupt banking in that way. Not maybe with apps, but we did it with with digital banking in that time. Then for me, what's important is relentless customer focus. I think for us, a lot of what we do, and it's also coming back in the group strategy, the customer is what we care about. It's about providing that really superior customer experience. And that is what you feel throughout. And this is also, and I will touch upon it later, how we look at the business banking propositions in ING, and I will touch upon Germany specifically. And then finally, it's the level of collaboration. I think building the communities within ING, working together, learning from each other, this is also what's helping us now to build business banking in Germany. And yes, we made a big commitment to Germany, also business banking. Last week we had our annual media conference where we prominently showed that business banking was one of the pillars of growth going forward. We are positioning it as the third pillar next to our established retail and wholesale banking businesses. And this is where I think if you look back, we started only as a provider of lending. We started as a lending operations. We did also embedded finance, and we did it for a couple of years. And we realized, if you look back at what the client actually needs, they want something bigger, they want something more. So in 2023, we started offering a savings account. And then last year we said we also need to do a current account. And that current account proposition currently is only available for self-employed and delivers functionalities like payments and debit cards. And I'm happy with where we're going now. We also presented last week 10,000 clients, 1 billion of liability. So we're hitting the first milestones. But when we listen to our customers, we see that they actually want to have more. So with what we have promised and what is our commitment, first enlarging it to have more customer groups in there. We will go to legal entities, we will go to founders, but we will also start to deliver different type of features. And not surprisingly, we will start with building on the one side payment functionalities, which you would expect. On the other side, we're going to build connectivity with third-party providers. One of the things that we also recently did, for instance, we realized accounting is important. So last week we also established that link with accounting. And ultimately, for us, what we believe we can be is the beliefste bank, also for SMEs, something that we have been for many years for private individuals. And this is, I think, also where our strength is in the 10 million, almost 10 million clients that we have on the private individual side. A big proportion or a proportion of them are actually owners of companies and are private individuals that are self-employed that would like to have a similar type of banking experience for their company as they have with us on the private individual side. Now, if I look at what do these companies want and what do we also think and what do I think is the future of SME banking, and let's take an example of a prospective client like a veterinarian. Let's say she is already our private individual client and she has a company, she started it and she's looking now for a business account. First and foremost, she wants to have something that is frictionless. She wants to be able to open the account immediately. She wants to be able to feel safe and secure. And she is expecting that also payments are real-time, fast and quick. She wants to be able to receive income with invoices and she wants to be able to quickly pay. But that's, for me, not enough. And also in my prior roles, I was also chairman of the Chambers of Commerce. I spoke to many company owners and entrepreneurs. And they're always very excited about talking about how their businesses are growing, what are the market opportunities that they're seeing, comparing notes about competition. In none of these discussions, anybody ever came to me and said, Serge, you know what I really like? The administrative side. On Sunday morning, Saturday morning, opening up my books, doing the administration, doing the tax filings. This is what really makes me work. So I think entrepreneurs also want us to help them to save time. And saving time means making sure all the other type of processes are there, whether or not it's HR, payroll, fiscal, or accounting. And finally, they want a partner. They want a partner if they grow. If they grow their business and they have different needs, they want, for instance, a loan. So they want to have the loan in an instant way. Or they want to have support to advise how to grow their business, what are opportunities and how they can go forward. So they're looking for tools in the digital environment that still gives a personal touch and helps them to move forward. I think that's for me a bit where I think the future of SME banking should go.
Yes, thank you, Serge. So when I listen to No One Likes Administrative Work, I'm quite curious to share your experience after Netherlands, going to Bucharest and now going to Germany, what this really means. Alex, let's talk a little bit about Holvi, right? As far as I understand, I mean, you have been part of the Holvi birth in principle as speed in investment. You actually were You were part of really funding the first paychecks back in 2008. I would say a pretty innovative step at these days, or strategic visionary to create a digital SME bank in these days. Then there was a short part of being part of the portfolio of BBVA, which also was one of these banks where we as a consultant looked at and said, wow, this is a pretty digital bank. Yeah? And then there was this management buyout from Tomáš, as co-founder of Holvi, I think it was 2019. Tell us a little bit about why SME banking, why that vision, at the beginning, so early, quite risky being the first move on the market, and what's the commitment of Holvi to the SME segment?
I tried to stay young. Unfortunately, I wasn't in 2008 writing checks yet. I was still a bit younger back at the time, or too young. But it was a remarkable story. Holvi is a company of firsts. It was the first company to ever offer business accounts with a debit card back in 2014. N26 didn't even offer cards, and Chime in the US just started at the same time. And it was the first company to successfully exit such a business model. And that was the time at Speed Invest when it was a bit more relevant during the time for me as an investor. And then there was the BBVA time, and Holvi went through this corporatification of a bank that was like, we do digital now. We have now a digital portfolio, and they put money into customer acquisition without making sure that the product at the same time also develops the same way. And then Corona hit in 2020. And they were already shutting down Simple in the US. And at the same time, there was also a bit of the looming Damocles sword then over the heads of Holvi. Would this happen as well to Holvi? And that's when the Holvi, again, a company of firsts, was the first one to do a management buyout and buy it back completely, back to the original founders and the team around it. And then a couple of years later, the first one to become profitable. The buyback happened. So just imagine this. You have the opportunity to buy a company from a large bank. The company does 4 million in revenues. That's quite nice. But the company also does 16 million in losses. That's quite the decision to make, to put money in your hand and say, I want to buy this. And then over 4 years, you see everyone raising funding. Conto raised $500 million in funding on the $5 billion valuation. Phenom raised, all those competitors coming in. And you are trying to save the company of not going bankrupt. And 2 years ago, when the turnaround was final, the company did 20 million of revenues and 6 million in profit. And that's quite a journey of firsts. And there's quite a few more coming. But it's good to see Holvi still being around and being able to commit to the market.
Yeah, I think that's a very, very impressive story. Thank you, Alex. Pierre, don't take it personally. I will jump to Mandya, and then I would like to body language goes down. No, I would like to have your consultant view after these three industry people have spoken. Mandya, we often talk about customer-centric led organizations, product-led organizations. We have heard ING, we have heard Holvi. Banxware is, I would call it, a very product-focused perspective, right? You offer lending, okay? Yeah. That's what you do. You started doing this for the e-commerce segment. You broadened last year actually towards SME in general. Maybe you can shed some light on what the reasoning for this was. Mm-hmm. And obviously, I'm also quite interested in, and hope the group too is, what's your contribution to the ecosystem finance? And I think we need to talk about embedded finance. There was this great tech quartier session yesterday from Lars Markul about embedded finance. Talk about your role, the role of Banxware in this ecosystem.
Oh, there are many questions.
And we now go for Conrad.
Yeah. All right, let's start maybe with the first one. How do we see ourselves in the ecosystem? We started off, it was quite funny. In the beginning, we said we are a white label merchant cash advance provider. That's how we started back then. There was this famous saying of like every company can become a fintech company and all that. We claimed it. And at some point, there was this buzzword, embedded finance. And they're like, okay, we do embedded finance. Let's jump on that wave, obviously, right? Because we were raising funds back then. So like, okay, let's jump on it. But at the end of the day, when we started off, at some point we'll offer accounts, cards, and all that. But at some point you realize lending is really a tough discipline, right? Especially if you start from scratch when it comes to, assessing risk, having the funds available and all that. So we said like, okay, we want to be the embedded lending provider. That's what we want to be and what we want to focus on. And then from there, we basically developed. We said like, okay, what are, easy entries for us? And it was basically, going into a segment that is very wealthy of transaction data. So digital, or like, let's say data in general that we can access. That's one. And two, that have a very strong digital footprint. And e-commerce is basically, was the lowest hanging fruit looking at it. And what we wanted to do differently is, when we talk to SMEs, talk to sellers at the end of the day that sell on platforms such as Amazon, eBay, and so on, they're like, yeah, it's a hustle to get financing. It's very bureaucratic. I need a lot of paper. I think everyone in the room knows what I'm talking about, and so I don't need to elaborate a little bit more there. But we want to do that differently. We want it to be transparent. We want it to be, convenient. And we emphasized a lot speed. So that's why we said, okay, application within minutes and decision within 1 day. And so that was always our purpose and let's say our goal. And until now, it's still our goal. We opened up to other industries. It's, let's say, from two perspectives. One, looking at just macroeconomics. Right, macroeconomics. Where do we stand with e-commerce? It's a little bit tough. There was this bubble in 2020, especially with COVID. Everyone was selling online. There was huge revenues and so on. And what then after that happened is basically, okay, the ECB rate went up, inflation went up at the same time. So we were not consuming that much. And number one reason for an e-commerce company to basically, the demand for financing is coming to replenishment. Right? They buy more inventory. And if we consume less, then at the end of the day, there's also less to replenish and less to finance, right? So that's one view at it. And then at the end of the day, it's growth and volume, right? We have shareholders that we need to somehow make happy, right? As you also entirely do have. And that's why we said, okay, what we applied in the e-commerce segment is something that we can for sure also apply in other industries. And one thing that always helped us when entering new industries was we focused on transaction data on the bank account. This is something every single company has. So we focused on that. We really kind of said, okay, this is the core of our underwriting. And from there, we enrich it with alternative data, be it, credit bureau data, be it data from that is, coming from the platform that no one else has access to. So that's the way we kind of looked into and how we moved into kind of develop within the market. I hope I covered all the questions.
I think so.
Did
I look into the face. Yes, I think so.
Yeah, okay, perfect.
Thank you, Mandya. Yeah, now it's your time. You actually have seen the world inside out, outside in. You've been in Barclays. You're now with Alvarez and Marsal. What's the perspective or your personal perspective on the industry in terms of readiness to transform? How do you really see that the industry can really make this next step of becoming excellent in serving SME clients? And I remember at least in my old consulting days, the big battle between transform the core and just throw away the old model and just build it from scratch on a white paper. What do you have a view on this one, and what's your view?
Well, my view, I think, very similar to the way the panel discussed it, was a consistent and relentless focus on the customer, right? I mean, at the end of the day, everyone, if you think of our collective role in banking, and our hope is that every S becomes an M, and every M becomes a larger multinational, big global player. That's the ultimate goal, right? Because if that happens, then everyone in the value chain profits from that in some way, shape, or form, especially the business itself. So if we look at that, then we say, okay, well, where are the barriers for that? What have we been seeing in the industry? So I think the first thing is there's been a huge focus on the consumer side of the house when you talk about digital. And then you say, well, how do we apply those principles in the same way to the SME segment? Well, number one is you start understanding the journey that needs to happen for each of the customer types. And I think you talked a little bit about what the customer needs. What are the common pain points that you find today? However, in the SME space, it hasn't undergone as much of the transformation at the core that you talked about as in the retail space. So what are we looking at today? the environment requires us to be far more data-driven than ever before, right? So whether it's in the understanding of the customer or in the way that the transactions are being processed, every single way that an SME is engaging with a bank or through payments or through invoicing or whatever needs to be captured so that when you say you're a partner, your credit risk process doesn't sound like you're not a partner, right? And I think that's the differentiation that's happened today. If you speak to customers, they don't have a transparency when they speak to their banker and they say, we want to be your partner, and then a credit risk decision is made that completely goes against that ethos, right? That says, we may not understand you as a business. So what are the tools available today? And therefore, I think what has to happen is this transition to what we believe is a concept called coreless, which is really looking at the way that you move away from these big monolithic core technologies that drive a full stack platform to a data-driven core, which is very much around disaggregating data from monolithic environments and having them available to all the touch points in the ecosystem so that you have a transparent view of the customer at every lens of the interaction with the bank. I think the other key thing, and you'll be surprised that you hear this from me who's driving digital, is you're going to have to strike the right balance between human intervention and digital engagement, right? In my view, there will always need to be the concept of a human in the loop because of the empathy that's required with helping business owners be more successful. And digital does a good job at that because it gets them things as rapidly as they need them, when they need them, and how they need them. But the conversation with the human and having the human in the loop at the right moment is just as important. And if you can digitize the encapsulation of that, which is engaging with the human at the right time via video or other mechanism, bringing them into the digital experience, I think is where it's going to go. So I think it's those combinations of the empathy, the partnership and the outcome of the growth, and making sure that data helps you understand those businesses better is where I see the industry going. And not just as a consultant. I mean, I work in clients every day, so I get to see this in operation at some of the banks that are here today as well. So that's where we see the industry going.
Okay. So let me, there's one thing that resonates quite well to me, that's the human in the loop, or some people call it bionic banking or whatever you want to raise it. And that's also actually my experience trying to scale up a company selling software to SME segment. It's not that easy. It's quite tricky, to be honest, because you have a group that has a high digital demand, but at the same time, you want to really take them by the hand, and you need to take them by the hand and lead them through, and it's a very trust-based issue. So bionic or human in loop is quite interesting. Serge, if I may shoot that question over to you, what's your view on this human in the loop, and how far do you really want to drive digital transformation and the digital customer journey? And can you drive it to highest extent, or is always a human in the loop perspective also important for ING?
So maybe if I bring it first back to where do we want to go as a group? And where we want to go is actually to make banking simple, but provide expertise. And I think in that concept, both elements are actually captured. I think the simple part is in the digital. We want to be there anytime, anywhere. We want to make sure what you can do digitally is able to be done digitally. But there are moments in time, depending on what type of company you are, that the expertise cannot be done digitally. Now, to be very clear, currently in Germany, what I'm building on self-employed and micro companies is more the digital part. Mm-hmm. So I will use my experience with Romania to illustrate also the expertise part. And if you look at the business that I run in Romania, it came from a different starting point. It came from a traditional relationship model where people were used to dealing with their bank for almost everything the same. In 3 years' time, what we have done there is we have built a digital proposition. But the digital proposition, I will give a couple of examples also on the loan part. I will use the loan as an example. So what we did there is we said, look, many of the companies want the loan at their convenience. They have maybe smaller amounts, they need to manage their cash flows, and they want a small amount. So what we were able to do when it comes also about availability of data, we were able, at the consent of the customer, because it came with the consent of the customer, to look at the transaction data that we had, information we had within the bank, who are you, what kind of business do you have, what's your financial position, with information from credit registries and fiscal authorities. And based on that view, we were quite able for the smaller amounts to give a loan in roughly 10 minutes, from start to finish. There were no documents needed, there was no intervention needed. What we started to realize is that for bigger loans, but also even for the smaller loans, there were people that at the moment of signing the contract, signing the loan contract, were feeling uncertain. Is this a smart thing to do? Have I seen everything? And this is where, for us in Romania, we said, look, we also need to have something that we call not bionic banking, but we called guided, where there was an opportunity for people to reach out to an expert. These were not clients that had a relationship manager or that had a normal relationship model, but they could get help from specialists to get the questions answered. Is this the right decision? Is this where it goes forward? And I think ultimately, when you look at the service model where we want to go, I think you want to go into what I would call easy banking, digital first, maybe with a call center there in case of need. Guided banking, where you say, look, a lot is digital, but some of the key moments of truth, you want to be able to link towards an expert and connect. And the relationship model, where you say, look, these are bigger companies, they have investment decisions, they might want to also look at sustainability, what is the business models, where you want to have somebody dedicated. So I think the whole SME scope is not a one-size-fits-all. I think you really need to segment it, and this is where it's completely different from the others. You need to segment it towards the needs of the customers. You need to make sure that your service model is aligned towards those needs, and also those needs can be done, if it can be done digitally, we will, because we see that this is what people appreciate and like, but there needs to be a moment of intervention for bringing in that expertise. And I think this is where maybe also the markets are not completely similar, because we had quite a rapid acceleration, experienced that in Romania with accessibility of data. So they created a registry where you could get and check identity of people, and also for managing directors. We had the accessibility for other data. And based on that, we could digitalize quite quickly. Opening accounts, 10 minutes, doing loans quickly, integrating also assessments of needs of clients in those processes. And then the other part is, and this is, I think, also companies need to go towards that transition. It's also the willingness of the companies to actually adopt digital. And this is where I think more and more you see the willingness to adopt digital. But we also had people that said, look, I still like to speak and to see somebody. And this is why I think those remote channels always remain very important.
Yes, thank you, Serge. Mandya, I think you wanted to share.
Yeah, exactly, because it's quite interesting. We have a little bit of a different view on it. Obviously, when we started the company, it's digital first, right? Everything we do and everything that we look at. I mean, we have obviously that advantage that we are small, we are younger, and no legacy, and so on and so forth, which makes it easy. But when we designed, especially like the entire process, the entire application flow, and so on, it was self-service. So it was never intended to have any kind of interaction from a human within that application process. Why? Because, I mean, at the end of the day, it's integrated in, for instance, Tidally. It's a platform that you use on a daily basis, and it's a platform that you trust and that you know, and then you go through that process. It's white label. So there is no, need for any kind of, human interaction from our point of view, at least, right? But what I do see is obviously what you also explained. In some segments, it needs to be potentially different, right? SME is so broad, right? It can be so many different segments, so many different industries. But what I would love to have at some point, and would love to hear maybe also potentially your opinions on it, is, at the end, I mean, it's a buzzword. We are talking about AI here and there and so on and so forth. But let's get down to it. Like if you, for instance, say like AI, we have the opportunity to use the data to have really a customized offer, a customized process for each of those segments, each of those, SMEs that are coming in and go through that application process. That would be the dream. That would be something I would love to have. And at some point, do we really need to have huge call centers, or can we just have an avatar? I don't know, maybe. And that's the way we kind of think about it. And we will definitely continue also go that path, because we simply can't allow to have huge amount of employees or FTEs in our company, since we are not profitable yet, but it will be at some point, hopefully.
You recognize that the micro went over to Serge. Now you witness a strong servant volley moment here. Serge, please.
No, but I think just to clarify, I think what the Romanian model had companies up to more than 100 million of turnover. So you need to look at the spectrum of the scope.
Of course.
And that's why I also started the comment at the moment in time. This was an example of how we built something from a relationship model to a digital model in Romania. And the model, like I referred to in Germany, that we're building, is intended to be as digital as it can be for the self-employed. Because this is where we see that these client groups, this is actually the same experience that they have with us and that they're looking for also for our businesses. So it's a very broad scope. And I think by looking at which segments we're operating, and we're starting now as ING in Germany in the self-employed and micro companies, this is, again, a digital first proposition.
Yes. And I need to continue throwing the curveball here. As soon as you start opening a business account to a self-employed or a freelancer or a small business, then there will be the video identification process that everyone needs to go through. So the complete withdrawal of human interactions might not be completely possible, even though ING, you're one of the leaders in also advancing on this side with the EAD being more and more represented among onboardings or also in our onboarding process. So these are very relevant progression curves, but completely without the human interaction, even if it's through the phone to verify passport data, unfortunately is still very much a reality. And this is also coming to the country differences. In Finland, where we are probably the fourth largest provider in the market right now, we have onboarding times of 3 minutes. It takes 3 minutes for our businesses to open an account, because there's Bank ID, there is like the direct integrations to databases that can pull KYC data. There is no video identification that needs to be done. The very same process that the regulator wants us to do in Germany takes on average 20 minutes. Because people need to go through at least, I've done it so many times, and need to do at least 10 minutes of doing the little passport check into the camera, and then they turn around the camera and put the flashlight on, and you might not even have your pants on. So it's a tough process still in Germany. So you do see those country by country differences when you really go into the details.
Yes. I agree. Pierre, maybe question to you again. We spoke about human in the loop, and I think we agree on that the SME sector is such a, I would say, heterogeneous sector, something I really steeply had to learn. You know, when I opened up Statista online account and I realized, wow, there's a big market, I'm going to step into it. I realized it's a market of micro segment by micro segment, and some of them really rely on, I need a human to speak to, some really want just digital, right? It's very difficult. Now we need to talk about AI. You know, AI is actually something that since 24 months is so vibrant in the discussion, and also we at Tidely, we have extremely, I would say, emotional conversations about how much AI do we need to serve SME clients. Is it a window dressing topic, or, I mean, you will certainly say, I would assume you will say no, but where does AI kick into this play?
Yeah, well, I just wanted to preface what we were just discussing before, and I was very deliberate in starting out what I meant from saying the journey from S to M to E, right? The entire pattern was that we want to progress every company from there, and every company will go from fully digital interaction to hopefully a multi-director model with the type of funds that you were talking about and the type of money that they have. So in some way, shape, or form, there's an answer for every single part of the journey, right, that we want them to have. So, and AI plays an important role in that. But I think if you look at where we were spending a little bit to what we were talking about just before was, I've been spending a lot of time in this kind of borrowings from 1 to 5 million or 1 to 7 million euros or something like this, right, which is probably a multi-director model. They don't need the cash tomorrow. They probably need the cash at some point in time. They want transparency in the model. They want their business understood, all of that type of stuff, right? So then you have this kind of the S's who want things instantly, digitally. There should be no human in the loop. We should do that quickly. So that calls into account, where does AI fit in? Well, I think that's what I was getting at in the data aspect, which is there's a number of points of data interventions where we are going to have to assess transaction data. We're going to have to assess the type of information about the company's performance, its accounts, external information, social information that you bring in to make appropriate assessments on credit for lending, decisions about the company, where to help them if we talk about forecasting, where they're going to be certain things they need to consideration. The data elements need to be looked at on a consistent basis. And that's where the bank needs to use that intelligence, is what I'll tend to call it, rather than the buzzword of a Gen AI or whatever. It's the rapid assimilation of this intelligence by the bank to be able to truly partner with the company in a truly digital way. So I tend to not glamorize the whole AI bit to the point where there is going to be a significant amount of data that can be captured either, and we talked about it before, the merchant rails, the transactions, a whole bunch of different sources, external and internal, that need to be rapidly assessed so that when the company is being serviced and supported, we are taking the right decisions to progress that journey from S to M to E at each step, right? And I think that's where AI is going to come in and be helpful, because it'll be able to parse huge amounts of information in rapid time to be able to allow the bank to make very good decisions that are quite targeted to the segment itself.
Alex, how far on the top is AI at Holvi?
Yeah, I just wanted to pick up on this. So it shouldn't be glorified too much, but yesterday alone we processed several tens of thousands of transactions. And all our customers, they use Holvi because they have access to bookkeeping or pre-accounting functionalities. So they can add the little VAT rates and maybe a tax category to it before the accountant needs to do it, for which they need to pay for human labor. So they do it instead themselves. Yesterday alone, for these dozens of tens of thousands of transactions, our AI has done this for 22 cents. This is an incredible increase of operational efficiency on our side, on the side of the entrepreneurs. That's what's putting the customer in the center and makes it really, really simple for them.
Mandya, your view on AI?
Yeah, I think, we were by nature always a data-driven company, right? Because, in order to assess risk, you use the data and you can leverage a lot on that data that is available. So that was always something that we put a lot of emphasis into. I think last year we did, tremendous work in order to kind of also bring our entire data infrastructure to the next level, in order to allow, to fine-tune our risk model even further, even better over time. And there's also there are funny things happening. We launched a partnership with Urban Sports Club. The model was not really trained with regards to gyms and so on. So we kind of also need to adapt that. It was also quite an interesting experience. But that is one, right? It's just, using the data and using AI to basically have very good decisions, and also, and that's what I'm actually dreaming of, and that's where I would love to be at some point, because when we started off, we were like, okay, we go into restaurant financing, we do e-commerce, and then we go segment by segment, which was beautiful, right? It was like you already the pain point, you offer a product that kind of fits that pain point. So that was the idea. But at some point you kind of also need to open up because of the macros that I explained. But I hope at some point that this, that we use that data, that we offer a product that is really customized to one segment, and also rightfully said, the size of the company. What are we talking about? Is it like a 2 million loan, or are we talking about 10K, right? And that's where it kind of, I hope that we'll get more customized and we go into that direction with Banxware.
Thank you. So let's hope that the regulation on the European scale will help us. And I remember when I woke up beginning of this week and I read all these feeder decisions from the European Commission. Let's see how this will develop. Let me maybe twist a little bit the question now. There's another, I would say, called myth that actually I grew up with, and that's about European scale, internationalization, right? A lot of banks actually then say we need to go across Europe, economies of scale, blah, 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 blah. Now, Serge, what's your view on internationalization at ING? I mean, you are a very vibrant international business model, right? You serve so successfully across all the countries. Is this a scale game? Is this a service game? Or is there any other visionary source that you would like to share with us? And how do you compare Romania against Germany? Obviously, that's also a quite interesting question.
I think let's start maybe a bit with the comparison. I think that ultimately the SME segment, and it was touched upon earlier, I think one of the challenges that always been is how do you make sure that you run and operate on the right level, that you can actually also the cost to serve is always important. So to a certain extent, yes, there is a scale question. I think if you look at ING, I think what we have always done is try to find in the segment what is the commonality across the countries that we actually want to run. And this is where we actually believe the commonality and the scaling comes from having similar types of visions. And for us, it's about frictionless. So you start to see that actually also in the business banking domain, getting out friction and making it simple is one of the key foundations that we have. The other thing that we are common about is the needs. And I think in Romania, the thing that we actually did there as a good example, instead of opening an account, we said, look, opening an account is not the way that we would like to interact with SMEs, because we're not using all the information that a client gives us to already from the start give them the best proposition that is possible. So in our onboarding, we actually started to look at and ask questions that were partly already needed from a KYC point of view, but also understanding what kind of payments, what kind of cash operations do you do? And we are trying to tailor the whole proposition that we offer to them in packages there. Now, I think we talked about personalization. What can you do there? We had certain of categories of packages that we offered. So it was not personalization one-to-one. It was personalization. Some of the features fitted best into a package and the client could compare and choose. But I think the really important part of that philosophy was that we are getting the clients to use us as the main bank and to start to get the insights in the transactions, to start to get insights in the behavior of the client. Because this ultimately helped us, like I mentioned with the loans, to make the right loan decisions and to make the right loan decisions quickly. And I think there are two things important, speed and predictability. I think when it comes to smaller companies that have the expectation of instant loans, speed is important. For the larger companies, predictability is important because it needs to fit within their investment profiles there. And finally, and again, this is where we are bounded with, is on the sustainability part, because we always wanted to help and bring knowledge and sustainability. Again, that was from all the business banking markets. If you now look at what we're doing in Germany, and this is where the internationalization and the sharing in the group comes from, the first two are important. How do we become frictionless? How do we open up quickly? How do we make sure that we can give people the instant loans that we're going to launch quickly? And how do we make sure that we give them a proposition, just like also you mentioned, that all the features that they want to have are there. And this is what bounds us as ING. And I think the culture that we have allows us also to share, to gain insights in each of the countries to build the best proposition there, acknowledging, like was mentioned in the panel before, not each country is the same. So you need to make sure that you have a similar type of vision that you implement according to the local specificness of the markets.
Thank you. Alex, Holvi as a Scandinavian-rooted player, I mean, Scandinavians, they live digitization, it's in their DNA. What does that mean for an international expansion road?
So it's quite interesting because it's true, the online banking adoption rate in Scandinavia is one of the highest. And I'd also say the regulators are quite progressive to give this some pace. I did not see that so much reflected in the business banking industries. I find that's mostly applicable to consumer banking. And but then on the other side, online bank account opening that is speedy and frictionless has been our bread and butter for more than 10 years. For us, it's the other way around. We go to a market. And for us, it is about how do we start localizing and become relevant, speak the local language and integrate deeply into the ecosystem. The approach that all of us, Monzo, Revolut, N26, Holvi, and so on have been done, like be registered in one country and passport over 27 plus countries, that's not going to work anymore right now and definitely not in the next 10 years. It's more about going to a market, committing to it and starting to speak in their language and building an offering that's really relevant. If you don't do this, then you would, in Germany, never implement Datev, Safdesk and LexOffice connections. You only do this because you commit to the market, because those connections, those API integrations to those major SMB bookkeeping players are meaningless in Finland or other markets. And that is our learning when it comes to expansion. It's localize and integrate.
Okay, thank you. Mandya, UniCredit became shareholder of Banxware last year. Yes. I think it was last year, right?
It was end of 2023.
End of 23?
Yeah, but we announced it in 24.
Time
to take the bus to January.
I'm getting so old. Now, lift the curtain for us. Is this the kickoff for internationalization, or how much are you struggling with regulatory things in the lending business? Yeah. What's the plan of Banxware?
I mean, Serge, you probably know it's a nightmare when it comes to regulations. I mean, you do not have that issues, but we do, because at the end, the market is pretty much divided. There are unregulated markets, Netherlands, Spain, but there are very highly regulated markets, such as Germany is, for instance, one that's super difficult to enter, or France. So that's kind of looking at it. But we haven't committed to any kind of country yet where we want to expand next. I think it's still a debate. But sometimes, the thoughts are around, should we really go? And I agree, you need localization, especially also in Europe, right? Different languages, sometimes different currencies. You probably need, customer support on the ground and all that kind of stuff. But then it's always a question, do I really go one by one in all those markets? Or do I just go to the UK and then from the UK to the US and go into a market, one language, easier to enter, that kind of stuff, right? And that's, looking at those considerations or thoughts, it's quite interesting because, it's not easy because at the end of the day, Europe, when it comes from a regulatory point of view, is very fragmented, right? And one of the, that we decided that UniCredit comes in as, as a shareholder, that was one of the pieces, right? Because we want to say, okay, we will use the infrastructure. We will use it in order to kind of scale the business and also accelerate. And acceleration also when it comes to, expanding into other markets, because they simply have the licenses, they have the local expertise, and we just run on the infrastructure, right?
Thanks. Pierre, what's your view on international SME banking?
Yeah, I think, again, you have to kind of take this view of the segmentation element of it as well, right? So I think you'll find that high degree of need for localization at the S and lower M level, which is, these are small businesses that are quite locally driven that require that capability. And then not too dissimilar from upper mass affluent to wealth to high net worth, you tend to look at abilities that require your clients to have presence in multiple countries, and therefore you get the banks that are offering these facilities to allow companies to be able to transact in multiple countries at once, handing over of relationship management so that they can have someone on the other end in the other country to be able to support and service them, cash facilities, debt facilities, without having to explain themselves all over again, whilst they do have to do regulation in the local market. But having that level of understanding of your customer as they progress through the journey that I talk about, and I'll reiterate again, S to M to upper, size and scale. So I think where relevant, it makes sense, but I guess what I'm getting and hearing from, you've got to get local right, and you've got to do that well, right? And if you get that right and do that well, and your clients are asking you your opinion on what they should have for internationalization, then I would say that's where you start to answer that question. But I don't see that as a primary value pool driver for banks, especially ones like ING who already do have a lot of presence in different markets, right? So
I really love this. Get that right, do that well. That's a good one. Now I'm in the personal dilemma. Corinna came to me and said, you need to be super strict on timing, Niclas. And I have a very tough timer running down here, 1 minute and 39 seconds. But I'm watching at Pierre's watch, and that gives me 6 minutes. So I'm following Pierre's watch now. And I would like to stop here and see whether there's a question in the audience to this panel group. Yes, please.
So bringing you back, Serge, to the morning session where Eddie and Jürgen spoke about that growth spirit, and sometimes younger companies have it. I think you made reference to Konto. And Jürgen said, well, our journey has actually had some targeted acquisitions, I called it. Lendix also was mentioned as part of your journey. So are you really building all this, or is somebody in this conference, or can somebody on this conference be hopeful that there will be some interest in acquiring, partnering, or are you building all this growth for business banking yourself?
Currently, we're building the whole proposition ourselves. So this is in-house built. We are building the journeys when it comes to payments, to lending. This is how we are also generally building all the other countries. Now, that being said, I'm walking around here. I'm very curious, so I'm talking to many people that have potential solutions, that have potential ideas. So I'm always open to listen and learn. But at this point in time, what we're doing is we are building the German business bank ourselves. You know the start, where we started, and we have integrated it, and now we are in-house and growing. We have the teams in place. We have the ideas in place. So this is how we're going to further expand.
Thank you. Any further questions? If not, I would ask each of you, maybe in one sentence, to share with the group. Oh, the time is really blinking now. Corinna, forgive me. Maybe one sentence, next generation SME banking. Is it for you, Serge?
For me, it's about customer centricity all the way.
Thank you. Alex?
It's highly localized, highly integrated, and eliminates or lifts operational efficiency for all the stakeholders involved.
Thank you, Pierre.
Use digital to find the next rising star.
Honestly, I would just say contextual. What's the context of each of those SME offer something that fits? That's it.
Good. Thank you very much to all of you for this great discussion.